Hey everyone, I'm Obina, and today I want to show you how I invest as a teenager. I have over 5 years of investing experience, and I've made thousands of dollars in the stock market. And now I'm here to share my experience, both the good side and the bad side. So if you're a teenager yourself, or you're a parent with a teenager, then I think this video is definitely for you. Let's get straight into it. Before we start, I want to let you know that this is not financial advice. This is just how I go about investing, and I'm just sharing my own opinions and my own strategy around doing so. So the first thing that you need to do is open up a custodial account. A custodial account is an investment account opened for a minor by an adult who acts as the custodian until the child reaches the age of majority, which is typically 18 to 21 years old. Websites like Acorns, Charles Schwab, and Fidelity all do custodial accounts, and I'll leave the links to those in the description. If you want to know, the one I personally use is Schwab. To fund the account, you can start off with like $5, $10, $15, maybe $50, $100, or you can go straight to $1,000. Whatever fits your preference and your budget, you can do. Just know that some websites might have their own limits, so make sure you work with that. And if this is confusing, don't worry, the website will have many guides and instructions to help you open up the account smoothly. And I promise you, this is the hardest part of this entire process. After you open the account, everything else is just smooth. Now we can begin investing. If you got this far in the video, then you're in luck, because what I'm about to share next is very important. Something that if I had known when I started, I would have saved myself from a lot of losses in the beginning and a lot of confusion about those losses. I do not day trade, nor do I swing trade to make money from the stock market. Day trading is when you buy and sell a stock within the same day. Swing trading is when you buy and sell a stock within a relatively short time frame, like within a week or a month or so. And I believe that this is not an effective strategy to use for the average person. Studies show that only 1 in 5 traders are actually successful in making money in the stock market. And that's at the very, very most. It is very risky and volatile. How do I know? I used to swing trade all the time, and I had no idea what I was doing. I used to just pick tickers that looked nice, like Apple, for example, because, Apple's Apple. It's popular. It's a tech company. It's not going anywhere. But like any stock, Apple still can go down in price. And so you can still lose money off of Apple. And if you're not paying attention, you can possibly lose everything in your account. So this is why this is very important. You have to pay attention when you're investing. You have to understand that as a trader, you're competing against everyone else in the stock market who's trying to find a good deal or something that might go high just because of hype alone. And the market is also something you cannot predict. So you're going off of speculation and competing against market analysts. Not only that, when you constantly make trades like this within a short period of time, you get taxed more when you do make gains. So let's just say you do end up making money, let's just say $5. It might be much higher for you as a day trader or swing trader than it would be for someone who was long-term investing. Like long-term investing is like within the span of like at least a year. So you just get taxed more for buying and selling so frequently. But feel free to experiment. Again, some people do actually make money through day trading consistently. But the goal here is to figure out what trading strategy or investing strategy works well for you. My investing strategy follows the principles of value investing. What is value investing? Value investing focuses on identifying securities or stocks that are trading below their intrinsic value. Intrinsic value is basically the real value of a stock. Like let's say a stock is at $3, but its intrinsic value is at $5. That stock might be considered undervalued. Its real value is truly $5, but the market thinks it's worth $3. A typical value investor will see this as a good deal because the market is trading the stock for $2 below its true value. So if you get in and buy the stock at $3 and the price rises to its true, real intrinsic value, then you make profit. Now, of course, none of this is guaranteed, but if you're a good value investor, you can get it kind of close. But always remember, the market isn't guaranteed to do anything. If that went over your head, I'll break it down. A stock is basically a small piece of a company. So to figure out what a stock is truly worth, we have to find the true worth of the company. We can do this through looking at how much money it's made in this quarter, which is where you hear quarter earnings come from. We can look at how much debt the company might have, its equity, its book value. Now, these are just the basics of fundamental analysis. If you want me to go deep into it, I'll be glad to do that in another video. Now I want to take you through a couple of examples to help you wrap your minds around how I invest and how you can start buying your first stock. Hi guys, so welcome to my computer. So I'm going to take you through how I search for stocks and how I go about figuring out which stock I want to buy, or how I just check the stock price in general. So let's say I want to know what Apple's stock price is. So all I have to do is go to search, and I can just type in Apple stock. Okay, so now I'm at Apple's stock page. And right now its price is at $200, and it seemed to go down by like 1% today, which is normal for stocks. They go up and down many times. So just to clarify, this is its stock price right here, USD, and this is how much it went down by today, 1%, or $2 off its opening price. But I want to show you one of the things that I really look for when I'm picking out a stock. So I'm just going to be honest, I don't really care about the price itself. What I care about is this number right here, the PE ratio. What this number basically means is the price of the stock right now divided by its earnings. Earnings basically represents the amount of money a stock has made in a year. Now this is going to be adjusted downward to a stock, so it's basically going to be proportional, if that makes any sense. It's like, you know how every stock is a piece of a company? Imagine having a piece of their net income. That's basically what earnings is. Basically net income, just a smaller version of it for a stock. So basically what the PE ratio tells me is that this stock price at 200 divided by the earnings of the company for the year, which I don't have the number to right now, equals to 31. So this basically tells me that the stock price right now is 31 times more than the earnings of the company at this time. What I usually look for is a PE ratio of 15. So the lower it is, the better it is for me. Because that means the company is making a lot of money per year relative to its current price on the market. So that would be one way I would value invest. Now, of course, there's many other variables that I check for, but I would say this is one of the major ones to really filter out the companies. So already if a company, in my opinion, has a P ratio below 15, it's better than average. So as you can see here, Apple's PE ratio is 31, so it's well above 15. So of course, this is not a stock I would buy as a value investor. Now, if you're a stock trader or you're some other type of investor, then it might be a buy based off of your strategy if it fits it. But for me, as a value investor, it does not fit my current strategy. Now, let me show you an example of a company that would fit. So I'm going to type in Bank of America stock. Okay, you can see it right here. It went up by 0.045% today. Again, doesn't matter. The stock market goes up and down all the time. And right now, its current price is $44.38. And remember, the number I mostly look at is the PE ratio. So it has a PE ratio of 13.25. That basically means that for its price of $44 divided by its earnings, it has a PE ratio of 13.25. So this company's only priced 13 times more than its earnings, which is a great deal compared to the rest of the market. So based off of this, I could already consider this company as a buy. Remember, the key word here is consider. There is many more variables I'm going to check, but I would say this one does stand out because the majority of stocks don't have a PE ratio under 15. So this really says something about the company and the way it makes money. Definitely an above average stock. Again, this is not financial advice. This is just what I do as a stock investor. So there's also two things I want to let you know about. One being the market cap. So now look at the market cap of Bank of America. This is $334 billion, right? And then compare that with Apple, $3 trillion. Okay, so these are two different market caps. So the market cap does not determine how a stock will do. And I know this sounds obvious, but for some reason, I think some people think that because a stock makes more money than another stock or is more successful, that makes it a good buy. While Apple is technically more successful than Bank of America, because what matters is growth. What you might even find is that some market caps that are like medium-sized or even small-sized have much more room for growth than those large cap stocks like Apple. So just know that, okay, just because a company is just more successful doesn't necessarily mean that it's a better buy. And most of the time you'll find that that's not even the case at all. Because most stocks that I buy are undervalued, or I would say underrated by the market as a whole. One other thing I want you to look at is the stock ticker, because you need the stock ticker to be able to buy stocks. So Apple's stock ticker is right here. You see right here where my mouse is, AAPL, right? If you plug this in to the stock investment account that you're using, you click on the button on your stock account, and where it says trade, you put in AAPL, then you're going to have access to trade Apple stock. You can buy as many shares as you want or sell. Same thing for Bank of America, BAC, that's its ticker symbol right here, and then you can buy and sell Bank of America whenever you want. So again, these are just the basics. I just gave you like a basic idea of how the stock market is like, how to open one up, and what I look for when I'm trying to figure out what kind of stock I want to buy, or if it's a good fit for my portfolio. Again, you can use your own investment strategy or whatever works best for you, but I found that this is what works best for me. So I hope you found this helpful. And if you want me to do more stock market guides, I will gladly do more in the future. So thank you guys for watching, and I hope this guide was helpful. Well, I wouldn't say it was really a guide. It was mostly my own experience of how I invest and how you can too. And again, if you have any questions, feel free to leave them in the comment section below. Don't forget to like and subscribe, and I'll see you in the next video. Bye.